The last time I spoke at MIF in Vancouver, I did a macro presentation, kind of like this time really is different. What's happening in the US and even in Canada with mining is absolutely profound and stuff we've never seen before, right? And then the whole macro picture, devaluation, de-dollarization, the debasement of fiat currencies, it's all coming together. It's a perfect storm, and you're all fully aware of that, right? So I can't do that again. And also, if I spoke about macro with what might be about to happen this weekend in the Middle East, it might be foolish and I'll look dumb in 3 days, right? So we're going to talk about something else, technical analysis of junior mining stocks. This is kind of my specialty. I'm probably the only speaker at this conference that talks a lot about technical analysis of junior mining stocks. So does TA work on junior mining stocks? I swear, if I had $1 for every time I've heard somebody say or post on the internet, TA, technical analysis, doesn't work on junior mining stocks. It doesn't work. There's no way it works. I would probably be able to buy at least an ounce of gold, although I'm not sure because gold keeps going up, so it's getting expensive very, very quickly. But this is a notion that shows a superficial level of understanding of what technical analysis is. If somebody says it doesn't work, then they just don't know how to use it properly, right? That they don't understand it well enough. And I think a lot of people think that like chart analysis and TA for short means you look at a chart and then you predict the future with 100% certainty. And that's just not right. And fundamental analysis doesn't work that way. And as far as I know, there's no analysis that predicts the future with 100% certainty, not even close. If we can do 60%, we're really good. If we can do better than that, we're a billionaire, hedge fund, manager or something of that nature, right? Most of the time, it's going to be near a coin flip, trying to guess the future, right? But technical analysis is not about predicting the future with a high degree of certainty. It's not about trying to guess what's going to happen next always. It's about studying data from the past, the only data that we have as far as I know, although that might change here in 2026. We might have data about the future too. And primarily we're studying price and volume of stocks, of markets, gold futures, silver, oil. And we're just simply trying to understand market trends. In fact, if you're able to glean trends from charts, you're already putting yourself a bit ahead of the game. It's not that complicated, but trends are very powerful in markets. And we're seeing some really strong examples of how trends can make investors a lot of money the last couple of years in metals, in mining. In fact, the big error that most people talk about here in 2026 is they sold too soon. You know, how many people sold a stock too soon here in the last couple of years? Come on, you should all raise your hand. Yeah, so like that's been the big error because the trend keeps going and we have no idea when or where it will end. So technical analysis is about probabilities, not certainties, and those probabilities are not exact because the future is always in flux, always new data coming about. So I might say, oh, there's a 65% chance of that, head and shoulders breakout happening in the next couple of weeks. Well, then the next day it might only be 48%, right? So it's always in flux and the charts are changing just like the data is changing, just like the drill results from the companies are changing. They're getting new information. Also, we want to manage risk and find support and resistance levels. So I'm going to ask for a little bit of audience participation. This is a very simple line chart. I usually don't use charts that are this simple, but for this purpose, I think it's instructive. What does this chart say to you? This is Scotty Resources. You said run? You mean like sell it? Really? Okay. You say sell it, because it's gone up? Okay, that's an interesting take. Well, thank you for being honest. Does anybody else have it? Like, what data can you gain from this chart? The volume's increasing as the price is breaking out. So this is actually very bullish. as humans, our instinct is often, well, it's up, I have a profit, let's sell. But very often that's a big mistake in markets, and you're going to leave a lot of money on the table. And I'll also note that this stock, like look back in 23, 24, it was going nowhere fast for like 2 years, just going sideways. And actually to in March, it hit 83 cents. It made a new low, right? So it was really flat on its ass for an extended period of time. But then something changed. August, September 2025. A lot of things changed, both in the gold market and the junior mining sector, but also with their drill results, right? So they were hitting on all cylinders suddenly, and it's kept going. And we have no idea where this trend will end. And actually, this stock is now above $3 a share. So this is how I usually look at my charts. I put a bunch of indicators, or just a couple indicators on. I use candlestick charting. And I'll just say that the indicators here, the true strength index and the relative strength index, are confirming this is a bullish chart. And this is from a week ago. And as I said, the stock's already up like another 20% from then. Okay, here's another one. What does this chart say? By the way, this is the biggest market cap company in the TSX Venture right now, 10 billion. What does this chart say?
Escalator right up.
What?
Escalator right up.
A very steady uptrend, yeah. Yeah. And now I made it candlesticks and I put my indicators on there. Does anything change for you in this uptrend? Well, for the sake of time, I'll skip ahead and say that the uptrend is weakening, actually. There's signs that this is getting a little exhausted up here at $40, $45 a share. And there's that big red candlestick from 4 weeks ago where it made a new high, but then closed near the low of the week. And the momentum indicators are also showing a little bit of waning momentum, okay? Just quickly, let's look at some real examples of TA in mining stocks, not just junior mining stocks, although most of my examples are juniors. There's one silver producer in this list. And I just want you to understand that the chart doesn't exist in a vacuum, right? So I use charts. I think charts are great data, very quick way to get a lot of data about a company, about trends. But I do everything. I look at drill results. I study macro, right? So I use as much data as I could possibly get, and I use it together, right? So the chart does not exist in a vacuum. We have to put it in context. So this is one of my favorite technical setups in junior mining, the drill results driven breakout. And I'm giving you guys a lot of value in this one slide. So if you pay attention to just one thing in this presentation, it should be this slide. And maybe you might use this in the future for yourself. So there's 5 criteria for when this trade setup is the strongest. The news is good. The company has just put out drill results this morning. Like let's say 7 a.m. they put it out. The market's not open yet. There's an imbalance of buy orders already building on the open. Longer term uptrend is in place. You look at the chart, lower left to upper right, but the stock has been consolidating recently, right? So it hasn't necessarily been running up a whole lot. Like maybe it's gently moved higher, but it's not, it's nothing crazy. They put out a new drill result and it's a step out hole. So it's not drilled into an area that's already been drilled 100 times in the past. It's a completely virgin area. And they hit. There's no shares unlocking, right? So you're not going to get hit with a ton of paper as soon as the market opens. And the company's not desperate for money. So they've got at least a few million and hopefully more than that in this market environment. So there's no need to absolutely finance in the near future. Although I'm sure if their share price goes up a lot and they're given a good offer, they might do a financing. And even better, the drills are on site and drilling is ongoing and more results are coming. So we can dream of what's possible and have some FOMO, right? So San Lorenzo Gold, and I see the CEO in the background, this was a perfect example of this drill results driven setup in January. You can see that obviously the stock was in an uptrend, making new 52-week highs, but it had consolidated quite a bit through Q4 of 2025. So it spent a lot of time going sideways. We like that. As technical analysts, we like when stocks rest and base and reset and don't go up just 20% every single day, although that's nice if you're long the stock. But you might be more tempted to sell if it appreciates that rapidly, right? So this was a beautiful breakout. You can see it gapped up and it closed near the high of the session. Now, again, in our monkey minds, we say, oh, we should sell because it's up so much, right? But look at what, so these are the results. I'm not going to talk about that, but it was a great intercept. But look at what it kept doing. And look at what it did yesterday. So if you sold on that day at whatever, $2 a share, you left 75% on the table in just over a month, right? So pay attention to when these stocks break out, especially in the environment that we are existing in today in the junior mining sector. Kingfisher Metals, I'll just quickly say this was another good example. And this also happened to be around the time of the MIF in Vancouver. They announced their final drill hole from 2025, a new porphyry discovery that gave them a lot of vectoring data for where to drill next. That was a news release. And literally within like 36 hours, the stock jumped from 45 cents to 90 cents and then retraced and consolidated because they had to do a financing. They needed money, right? So this would have been way better probably. It might have gone above $1 if the market didn't think that they had to finance, right? Like if they had 10 million in the treasury or something like that, right? But still, it was a very nice setup. Talon Metals, so this is a great story from 2025. This was literally my best trade in 2025 and maybe the best trade of my life in terms of total dollar amount. So you see that May, they announced 35 meters of massive sulfides in a new discovery. The vault zone broke out from its trading range. You can see that candlestick I'm pointing to with the arrow in the chart. And there's a news release. Those are the visuals. They didn't have assays yet, but any geo could look at that drill core and just know that was going to be really, really high grade. And, so I'll just go back and you can see what it did, right? And Talon is now on a split adjusted basis. It's over $8 a share today, right? So this chart just goes to August when it was $4, but still very, very big move. The big booty base breakout, right? So big bottom formed Banyan Gold. There were a lot of gold stocks in 2025 that formed similar bottoming patterns around the summer of 2025. And then when gold broke out from its range at the end of August, they shot skyward. So there were many examples of similar technical setups. Banyan Gold was a good one for me. And it's really notable that the chart had set up on the brink of a breakout as the company was accelerating its news flow, right? So again, context, the chart does not exist in a vacuum. The news matters too. So they hit a really nice hole at Airstrip, much higher grade than they had been drilling previously. Then they announced an updated resource showing over 4 million ounces of just under a gram. Again, higher grade than they had been showing previously. The market loved it. And you see what happened. And again, that stock's above $1.30 today. So that was a great one. Breakaway gaps. So I'm going to just quickly talk about gaps. Everybody thinks that gaps on a chart have to be filled. All the gaps have to be filled. They don't all have to be filled. Sometimes you get a breakaway gap. But I'll say that most of the time the gaps do fill just as a product of volatility. Share prices go up and down, they gyrate, and they fill in the holes in the chart. It's not rocket science. It's not complicated, right? But sometimes you get like a billionaire investor buying millions of shares on the open market, driving the stock up day after day, like in the case of Copper Giant. And you can see that was a breakaway gap. That gap all the way down at 21 cents. It might get filled in at some point in the future. We don't know, but who cares? If you bought at 30 or 40 cents, you made a very nice profit in a short period of time. So it's not all good news. It's not all uptrends and breakouts and everybody's making money. Sometimes there's bad news and big sell-off. So the big sell day, I know I've been a victim of a big sell day on a number of occasions in the past. I'm just going to show you a few examples. So this was IDEX Metals, September 2025. The stock had run up into the first results. The results disappointed versus market expectations, big sell-off. And what I'll say about this is usually when a stock drops this hard on that kind of volume following news, it's not going to bounce back immediately. It's going to take a while to bottom out, to base out, and probably for the news flow to get re-energized. And so that was a good example here because you could see what this stock did. It gently went lower over the next several months. EMO. So this was probably the best example from 2025 of a big sell day, down 71% in one trading session on over 20 million shares traded. And you can see that was in a trading range for a long period of time, waiting for news. The news came, investors didn't like it, it dropped. It did bounce a bit, but when you look in the context of the drop, it's a very weak bounce in EMO. 9 Mile Metals, this was a recent example of a big sell day, and it's still kind of sort of floundering around near 10 cents. So big sell days, big volume, big drop on news, probably not going to bounce back for a period of time. I'm going to skip through this one for the sake of time because this is a senior producer. This is Hecla, but this is actually a trade that I'm in right now. I'm long Hecla here, and you can see the range in the chart, the blue line, the black line, and it's on the brink of moving above, so a potential breakout above the resistance level there around $24 a share. And the True Strength Index is just about to turn up, and you can subscribe to my Substack, Goldfinger Capital, to learn more about how I use the True Strength Index. And again, sometimes the trade setups don't always work out. So at the January MIF, I talked about a long trade setup when a bull market stock comes off. So it retraces 20, 30%, and you get an opportunity to buy on the violent bull market sell-off, right? So this happened in Vizsla Silver at the end of January, early February. And I will admit, I actually went long here on that last day. You see the farthest right red candlestick on the chart. I went long at 475 a share on the NYSE. And I felt pretty smart for a few hours. It closed up a bit. But then look what happened. Literally the very next day, it opened down and then dropped like over 10%. And I got stopped out, right? So the chart met my trade setup criteria. It looked pretty good. It looked like there was a potential for a turnaround. But obviously, I didn't know the future, and I didn't know what was about to happen in terms of the news flow, which was obviously very bad on a number of levels, and it kept dropping. So I sold. I took my loss, risk management. When it broke down through my buy level and exceeded my tolerance for downside risk, I sold it. Very simple. And that's something that we can use charts for, right? Take the loss, move on. You can get back in later. Let's see what happens. Maybe things will change and you'll get an opportunity to buy it back later on. So one more chart or stock. This is Endurance Gold, EDG on the TSXV. This is a stock that I've written about a lot on my Substack, Goldfinger Capital. You can see it was in an uptrend throughout the second half of 2025, but it was kind of a stair-step trend higher. It wasn't anything crazy. But then in January, they announced a new resource estimate for their project in BC. 1.45 million ounces at 2.3 grams per ton gold in an open pit setting. And you can see what the stock did. So this was a breakout setup to new 52-week highs, new multi-year highs actually on heavy volume. And the stock ran from 40 cents on the day of the news. So you could have bought it at the open after the news. You didn't need to know the news in advance. You could have literally bought it on the day that it was announced. And within 2 weeks, it went from 40 cents to 90 cents. That's a pretty good trade in my book. But this was another example of a company that needed to raise money. So see what happened recently. It pulled back a bit the last few weeks. They will close a financing in less than 2 weeks to put $8 million in their treasury. And this is a stock. So I'm going to leave you with this chart set up, EDG on the TSX Venture. This is a very nice bull flag taking shape in this one. And I think once they close the financing and once it breaks out above that top downtrend line in the flag, this will be a very nice stock again for 2026. And I am long, and I'm quite bullish on Endurance Gold. So that's a trade setup that I'll leave you with. And I hope you came away from this presentation with maybe a new idea of what technical analysis is and how you can use charts and integrate it with fundamental analysis and drill results and all the data that junior mining companies love to provide us with, right? So thank you very much for your time and attention.